Okay, the various tax resolution options are penalty abatements, installment agreements, offer in compromise, hardships, bankruptcies, and other options. There are so many, as I mentioned before, that it's impossible to go through all of them without, it would be too lengthy of a video to go through all of them, but I'm going to try my best to at least address some of them. For example, penalty abatements. You have two types of penalty abatements. You can submit a first-time abatement request for failure to pay, failure to file, and other penalties, but not all types of penalties can be abated or removed. So you have to qualify for those type of penalty abatements, the first-time penalty abatement program. And the requirements are that if you look at the first year that you owe for, let's say that you owe for 2015, you have to look at the prior 3 years and see if you owed any taxes, any tax balances. If you owed any tax balances, you don't qualify for the first-time abatement. There's also, you have to make payment arrangements or some type of arrangements to pay the debt in order to qualify. There's also the reasonable cause type of abatement, and that's usually for cases in which there has been a fire and it destroyed all your records and you have to recreate them, and there was not enough time during the year to do that, or the years are so old that the bank records are no longer available from your bank. So then you have to find another way to prepare your tax return if the IRS has not done so already under the Substitute for Return program. And that's basically an audit that they do based on the 1099s and all the income information that is reported to them by employers and third parties. If you don't file your tax return, they do one for you. And of course, that type of tax return is not your original, so you can always have those amounts that are billed, you can have those adjusted by filing your own original. You can always base a tax return that hasn't been filed on the prior years, but it's best that you try to do the best possible alternative. If you've had a fire and you don't have all your records, you can go based on receipts that you may have, maybe duplicates, maybe some drives, computer drives, or bank records, credit card statements, and your prior year's tax return, if it's similar to the year that is missing. Ask for all the W-2s and 1099s, all your income sources for that year through the IRS. You can ask for that with Form 4506-T account transcript form, and you can ask for all those records on that form, and you can fax it, follow the instructions. Okay, also I want to mention that reasonable cost for penalty abatement, you don't qualify just because you didn't have any money in that year, or you made a mistake and filed exempt so that no taxes are taken out of your paycheck, and so you owe money, and you can say, well, I needed the money to live off of. That's not an excuse, and they're not going to abate the penalty for failure to file or any other penalties just because you filed exempt and you were not supposed to. And just because you didn't make enough money, again, that's not a reason not to pay your taxes. You have to adjust something along the year, whether it's reduce business expenses, reduce your own personal expenses in order to meet that payment requirement. If you're self-employed, make sure you're making estimated tax payments. If you don't know what estimated tax payments are, ask your accountant, tax return preparer, and they will explain how to do those. You do not want to have continued failure to pay estimated tax payment penalties because you're not paying those tax payments during the current year on time. And remember, it also accumulates interest. There's also a administrative waiver type of penalty abatement, and that occurs when the government announces that you qualify possibly for a penalty abatement due to natural disasters or a catastrophic event. Right now in 2020, we are going under a pandemic. It can be considered a catastrophic event. However, the IRS and no administrative official authorized has dictated or passed any regulation or law that prevents the IRS from assessing or billing the failure to pay penalties or other penalties because of the pandemic. Although under the first CARES Act, there were regulations implemented to give extensions of time for paying 2020 estimated tax payments, installment agreements, and so forth, but you need to go to the IRS website under the CARES Act and find out what those processes and procedures are and see if you qualify, so that when you file your 2020 tax return, you determine whether or not you qualify for any potential billing of those penalties because of the COVID-19. Again, I would look over those procedures and deadlines that were given and see if you qualify. If you don't want to go through that, get your CPA or your enrolled agent or tax attorney to determine that for you. There's also a statutory exemption for billing penalties, and those come about if the IRS itself has given you written bad advice, basically, on a process or procedure during the time that you're paying or filing your taxes. If it's in writing, you can submit that erroneous written advice, get a copy of that, and submit your request on a Form 843 claim. That Form 843 claim can be secured at the IRS website, www.irs.gov. Okay, so you've got first-time abatement, reasonable cause, statutory, exemption, and administrative waiver. Many of us know that when tax debts are due and we can't pay, there is the installment agreement options. You can request an installment agreement if you're an individual. You can request it online at www.irs.gov. Go to installment agreement requests and complete the form and submit it online if you owe individual taxes. And there are guidelines that are established for those type of agreements. Read the instructions, read the form, and submit your request. Now, the amount that you're required to pay, it will depend on your financial situation. You're not required to submit a financial statement if you owe less than $10,000, but you have to pay all the taxes, including accrued interest and penalties, within 3 years. That is what is known as a guaranteed installment agreement for individuals only, individual tax debts. They will look into the collection statute expiration date, which is usually 10 years from the date that the bill is created, not 10 years from the tax year. Okay, the collection statute expiration date is 10 years that the IRS usually has to collect the tax debt. But again, many factors can toll the statute, can extend it, plus additional months, depending on the type of extension or event that caused that statute to stop. And then it's recalculated and extended. There's also what are called streamline agreements. There's different types of agreements depending on the type of tax, the amount that you owe, that can be established with the IRS. However, some of them require financial statements, complete financial disclosure, including backup documents. That is why it is important that you seek advice from an enrolled agent, CPA, or a tax attorney. Not all cases require a tax attorney, not all cases require a CPA, and not all cases require an enrolled agent. A lot of things you can do on your own if you think you are able to do that. Everything is on the IRS website. On Google, you can find a lot of answers. You can also go to groups, tax resolution groups available on Facebook, and see if some people that are tax professionals might want to help you answer your questions. However, keep in mind that sometimes free or doing it yourself, you can cause a lot more problems for yourself. And I would suggest that you take advantage of the free consultation that a lot of these tax professionals offer. At least 1 hour free initial consultation, and then you pay for any time that's over that time frame. It is to your best interest. There are too many caveats, too many things to think about and to address before you submit any type of resolution option. You might have more than one option, depending again on your case. And just because your friend or someone you know has resolved their case with IRS, that doesn't mean that your case is similar. You can be working at the same location, same company, making the same amount of money, but in reality, what is the situation with that a friend or associate or whoever that may be that's giving you advice versus your case? Maybe they have family, you don't. Maybe they pulled money from a pension plan that caused a liability. Maybe your liability was caused by something else. Anyway, going back to installment agreements, a lot of cases over 50,000 require financial statements, especially if you have other entities, other businesses. For every business ownership interest that you have, it requires a financial statement. If you're a sole proprietor, it requires your individual financial statement and the business financial statement. Corporations, it may require that the main officers who make financial decisions to submit personal financial statements, especially when it comes to a company owing payroll taxes. Okay, so keep in mind a lot of things will dictate whether or not you qualify for an installment agreement. Now, many of you hear on radio ads, TV ads, and otherwise about the Fresh Start program. A Fresh Start program is nothing more than an offering compromise. Form 656B booklet. You can read that booklet on your own and see if you think you can prepare all the documentation and information that is required to submit an offering compromise. And don't think that, oh, I owe $30,000 and all I have to do is, oh, I can pay $500. I'm going to submit an offer for $500. It doesn't work that way. You can't just pull a number out of the cloud and put it on the forms and expect that the IRS is going to accept that. It doesn't work that way. You have to first look into your compliance. Are you in compliance? What caused the liability? There are different types of offers. There's a doubt as to liability offer. There's a doubt as to collectibility offer. There's an effective tax administration offer. And then there's other attachments that can come into play that are called either future income collateral agreements or many others. So, you know, it's a matter of you seeking the appropriate person to help you. Sometimes tax professionals, their niche and expertise is not tax collection, tax debts. It may be preparing tax returns only, or CPAs may just want to deal with the accounting for their clients and their tax returns. Others will do it all. They will do audits, they will do tax collection cases, and many others. The same with enrolled agents. Some enrolled agents, they only want to deal with tax preparation and bookkeeping, whereas other professionals will do the whole, they have the expertise and knowledge to do anything and everything regarding taxes. So you have to find the right professional, okay? That's my suggestion. Offering compromises are not difficult, but they're also not that easy depending on each case. And a lot of things come into play. You submit a package for an offer in compromise thinking that you qualify, and you may qualify for any number of other options. Maybe penalty abatements. Maybe you should really be filing bankruptcy. That's another option. But I would suggest that you get your account transcripts from IRS and take those to a bankruptcy attorney so that they can determine which type of bankruptcy you qualify for, and if the debt is even dischargeable, which means that the bankruptcy court will determine whether or not you have to pay that debt. So a bankruptcy attorney or even one of these tax professionals that know tax collection can tell you whether or not you might qualify for a bankruptcy discharge. But again, the best source is a bankruptcy attorney. All right, and there's no guarantees because the bankruptcy court can change from one bankruptcy type to another. You can go in with a bankruptcy Chapter 7 asset case, and they can turn around and say, no, you're a wage earner and you only qualify for a Chapter 13, so they will throw your case to a Chapter 13 bankruptcy, which is a different requirements and different steps that have to be gone through by the bankruptcy attorney. So, the best bet for any potential bankruptcy is for you to contact either the 3 tax professionals and then decide what your best option is. And just because there's a bankruptcy option, that doesn't mean that excise taxes or payroll taxes will be discharged. Those type of taxes are never discharged. Okay, so if you owe 941 taxes, bankruptcy is not going to save you. It might give you more time to pay, maybe, but again, a full analysis is best. And any tax professional should be asking, or at least determining, 3 things: current compliance, your estimated tax payments, your tax withholding, filing all your tax returns, going back 10 years minimum. And I say 10 years because, again, if you haven't filed tax returns going back 10 years and it's shown on their system, they will require you to file those tax returns. You have to be in compliance to even meet the requirement for an offer to be processable. And a lot of accountants out there and people think, oh, we only have to go back 6 years. That is not the case when submitting an offer in compromise. If you have unfiled tax returns, you have to be in full compliance with all filing requirements. If you have a substitute for return, a tax return that was done by the IRS because you failed to do your own, that type of tax return and bill is not dischargeable in bankruptcy. So I'm going back to bankruptcy because I'm addressing compliance. But anyway, they should ask you about compliance and confirm it if you hire them by asking for transcripts. Current compliance, what caused the liability, because that will determine your different options within collection. And then from there, see if you need to provide a financial statement or documents so that they can complete the appropriate financial statements. And then once that is done, determine your best options from there. And again, each case is different. Some will require more information, some will require less. And so you need to follow through with what your advisor is telling you. In most cases, a lot of you will wait until a revenue officer comes to you knocking at your door at your business or last known address at your home, which you really don't want them there. It's very frightening to all of a sudden realize that a collection officer that's located close to your home or business is knocking at your door and demanding the money that you owe the government. It's not a pleasant feeling, and it's very scary for a lot of people. So don't wait until that happens. Open all your correspondence, because a lot of the letters and notices have deadlines for submitting appeals, deadlines for submitting claims, deadlines for many different things, deadlines before they garnish your wages or take your bank accounts, and even deadlines for seizure and sale of your vehicles and other assets. It is important that you open up the mail, read it, and if you need help, get a tax resolution expert to help you. If you don't have one, you don't know who to go to, there are many listings. For example, here in California, there's a California Society of Enrolled Agents. There are CPA listings, and there's also Google. You can Google enrolled agents. You can Google CPAs, tax attorneys. Call a few. Ask them, the various questions, their expertise on tax resolution, tax debts, tax audits. If they're willing to take a case, their fees, do they offer free initial consultations, all the basic questions that you would ask of anybody you're looking to hire. But, going into other options, again, cause of liability. What caused the debt? Was it an audit? Is there a possibility, maybe as an option, for an audit reconsideration? Maybe an amended tax return is in order. Or maybe another type of offer in compromise, which is a doubt as to liability offer. And again, the professional will have to analyze your case and determine which of all these options or others you might qualify for in order to reduce the debt and try to lessen the financial burden on you and your family, basically. There's also, as I mentioned before, many types of appeals, and these appeals can vary either through the advocate, taxpayer advocate, or to actually go to the appeals section before an appeals or settlement officer, depending on the type of case. But you don't have to worry about knowing the different types of officers there are. There's also another process called the assignment for the benefit of creditors, which the IRS really doesn't have a section for that. You go and hire this company that takes over basically your creditors and doing what they need to do under their processes and procedures to deal with your creditors. And it's called assignment for the benefit of creditors. The IRS cannot touch you in the meantime, but they will investigate and they will see if there's any way that they can try to get the taxes that you owe, put in through the creditor's requirements or through that process. There's also what is called collateral agreements. There's different types of those. Innocent spouse claims, equitable relief claims. Just because you think that you were innocent, that doesn't mean that the IRS will approve an innocent spouse claim. There's tax lien releases, discharges, non-attachments, withdrawals. Again, each one has its own process and qualifying factors. There's what is called currently not collectible hardship. You can prove that you are in a hardship situation. Penalties and interest keep on accruing. There's also uncollectible for defunct corporations that have no assets, no remaining accounts receivable. All the equipment and assets were obsolete, but you're going to have to prove that before the corporation is declared defunct and out of business. But there's other collection avenues that the IRS has against the officers, as I said, if you owe, if the corporation, LLC, other types of entities owe payroll taxes or excise taxes. So you have to be aware that just because you're a corporation or that you own a corporation and you close it down, that's not going to exempt you from not paying payroll taxes. You can be held personally liable for that unpaid liability, at least portions of each quarter, depending on the amount of what is called trust fund that hasn't been paid. And that's for every quarter, all the tax withholding that remained unpaid, and half of the Social Security. That's what the trust fund portions are. If you don't know what those amounts are, you will be getting notices from the IRS and an investigation first, interviews, and then proposed assessments with calculations of what you personally can be held liable for. If you were the person, officer, director, even an employee who had signature authority, who had financial authority on behalf of a corporation to make sure that those taxes were paid. There's also other types of resolution options, even when your assets have been seized or levied. It's the same thing. A levy is a seizure of your bank accounts, your business assets, any other type of assets. There are always options. It's a matter of timing. It's a matter of you seeking the help that you need on time. Because even the best tax attorney or the best attorney who's well versed in tax debt, if it's beyond a certain point, there's nothing that can be done. And other times there is. So again, you need professional help in those cases. There's tax court filings. Again, those have time frames. And depending on the type of tax that is due, keep in mind that a lot of these processes and procedures are very costly. Bankruptcies are costly, depending on the type, especially for Chapter 11 reorganizations. You're looking at over $25,000 just to file a Chapter 11. And that's not counting everything else that comes after that. That's just the initial. And depending on other factors, and that doesn't absolve you for that payroll tax debt individually. They can still pursue that, even in a bankruptcy. I had mentioned the Taxpayer Advocate. They can intervene, but that doesn't mean that they have the power to change the IRS collection officers or administrative opinion or process that they intend to do. They can intervene, they can get records, but that doesn't mean that they will change the mind of what they have determined to do. You can seek it, but in many cases, it's just a little temporary, and I mean very short temporary hold sometimes, and sometimes that doesn't even help because a revenue officer can recommend that submission of a certain request or process is only to delay collection, and if management agrees, they will pursue collection anyway. So you need to get a professional, as I said before, who knows what these collectors can and cannot do. Many times they will try to close a case or the action that is attempted by saying, oh, you're just doing it to delay collection, but there are certain actions that can be taken that it's not going to matter if they elect to go that route and trying to move forward and push their agenda of collecting the tax in a way that is not appropriate for your case. All right, so we went over some of the resolution options. I hope this will help you. If you need any assistance, call me at 323-344-2294. Again, 323-344-2294. Or my associate, Luz Orozco, at 310-650-4664. I also urge you to go to my Facebook page, Tax Resolution Services, where I post news articles from the IRS, news articles from the IRS, and other blogs and articles that may be of interest to you. Resources for you, you can Google Internal Revenue Manual Part 5, or go directly to the IRS website at www.irs.gov. And don't forget to subscribe on the YouTube channel Tax and Business Zone so you get notified of any updates to our videos. Thank you again. Bye-bye.